candlestick gives you a massive amount of information of what's happening underneath the hood of the market. If you can learn to read them, then you can also start to piece them together and create domino effect trades that has allowed me to capture a trade just like this one this morning, where I risked about $600 in that trade and closed up for about $2,600 in profit. Because if we look at this candlestick right here, what it's telling you is it opened up here, sold off, and then reversed and closed at the highs. What that tells you is there is strong momentum over that candlestick. And it's telling you this story of what is going on. And so what you can do then is you can use that as well when reading candlestick cheat sheets. You're gonna be able to throw those out the window after this, because all you need to do is really read what the candlesticks are telling you to understand what they mean. And with this candlestick pattern right here, it's called the 3-line strike pattern. What these 3 bullish candlesticks say is, well, the price is consistently going higher. And so what that does is that creates, well, on a smaller time frame, an upwards trend line. And so what then happens is it breaks that, and then all of a sudden has a massive sell-off. And generally when you're reading charts, when a trend line is broken, it's totally possible it reverses. When it breaks, it can have a really big move like this. And because it has a big move like this, well, it shows that the momentum is most likely going to continue lower, because there was a clean methodical move up, and all of a sudden over one candlestick, it's made a massive move lower. And so you can do this on any candlestick pattern. Really reading into what these are telling you is generally every pattern is telling you something, but if you read into the candlesticks, it'll tell you even more of why that candlestick pattern means that. And I think the strongest one out of this whole cheat sheet is this inverted hammer candlestick pattern. And I'll show you an actual trade I took that basically used this. But what this pattern is telling you is, the market moved down based on these 2 red candlesticks, and then it hit here and it attempted to keep going higher. It started to bounce, find momentum, and then it made an attempt to push lower. And I have always found with trading that when something makes an attempt to push lower like this, and it ends up failing, which is what these 2 candlesticks show you, is it made that attempt to go higher, it reversed, and then it started to go back higher, is it's showing you a ton and a ton of strength, because, well, it failed to go lower, and so it makes it more likely to then reverse and go higher off of that. It essentially makes a little double bottom here, which is a really, really powerful pattern. And to quickly show you another great example of that, here's a trade I had a couple of weeks ago, where right here is where I jumped in. And if you look at these candlesticks, you kind of have that exact same pattern show up. If you look at this right here, it's that exact same pattern. And this is essentially telling you that is the market was in a downtrend. It started to bounce, made an attempt to keep going lower, and then that actually failed. And then it had a big bullish candlestick, which kind of confirmed that it was failing of that attempt to go lower. And so for there, that was kind of my final confirmation, and we'll go into the more domino effect in a minute of getting into this trade. And so I jumped in right here. Market played out really well in my favor. That's where the domino effect comes into play, is this pattern will show potential good reversal for a little bit, but then you have to think about the bigger picture domino effect as well. And that pattern I saw right there was the sole reason of confirming of me getting into that trade. And so going back to the trade this morning, it used the 3-line strike pattern perfectly across all timeframes, and it created that domino effect, allowing me to capture a massive move in the market. And so this right here is on a 1-minute chart, but if I go back to my actual charts and show you and look at, here's a 15-minute chart now, we're looking at the NASDAQ futures, you can see that 3-line strike pattern show up here. Now my candlesticks are different colors, and I just do that because it helps me not be distracted by the colors. But what we have here is the market's moving up in a clean, bullish, methodical movement, and then all of a sudden there's a massive move down. And of course what that does is there is a upwards channel just kind of going higher on a smaller time frame. And so this is on a 15-minute chart, and if we go to a 5-minute chart of the exact same time, just to confirm that, where you can see that exact same thing just on a smaller time frame. And so this is where the domino effect you'll start to see, where we have that clean methodical move higher followed by a big bullish candlestick. And of course, what do those potentially do? They give you that momentum switch lower. And then of course, going to an even smaller time frame, you have that as well, where this is basically was my signal for getting in, is you have your couple bullish candlesticks here. I'll just zoom in here to make it a little clearer. I have my bullish candlesticks here. It kind of starts to sit there for a minute, showing that loss of momentum. You can start to see it coming in, and then boom, a big bearish candlestick. So this is where that kind of domino effect comes into play, where you're seeing on every time frame, you have that. And what does that do? It gives it the potential to break lower in a massive, massive way. And so how this is really effective is the idea is that the smaller time frame will trigger first, because it's a smaller pattern and takes less time to play out. Because if you look here, the price up here is 18,400 and down here it's 18,375. And if we go to a 5-minute chart, you can see that 18,400 is all the way up here. And by the time this candlestick is finished forming that really bearish move, it's already down here at 18,352. And then if we go to a larger time frame, if we look at, maybe this candlestick is kind of a better version of it, it's all the way down here, right? And so that's where having all of these align up allows you to jump in based off of this pattern right here, which is the exact same 3-line strike pattern. And then you're able to capture the larger move on a bigger time frame chart. This is what allowed me to, if we look at the trade again, is enter in at basically the highs of the market based on that smaller 1-minute pattern, but then capture the bigger swing of the 5-minute or 15-minute pattern as well. And so you can see right there, that's where I basically closed out. I closed out at the support because, well, the market, just looking at the chart here, is, well, there's kind of a lot of support here. And so I realized that it's better to get out at that support level. But we'll go into kind of the trade in a minute and managing it. But that's the whole key, is what you can do with reading into candlesticks is you're able to domino the 1-minute into the 5-minute and the 5-minute into 15 minutes. And the crazy thing is, if we look at the other trade I was talking about from a couple weeks ago, is it's doing this exact same thing, but in reverse. And so right here, we have that 3-line strike pattern. And if you look at, though, this blue box down here is a support zone. And so I'm expecting the market to bounce off here. If we just zoom out, you can see the market's come down here multiple times and bounced off this area. And so I'm assuming that, well, when it comes down here again, it's going to do that. And so, there's a little sneak peek, oops, of what actually happens. But as we're looking at this in real time, you can see that this can also be a reversal strategy if it's used in the proper place, because it's essentially giving that methodical move higher, which is showing some strength off of the lows, and then all of a sudden there is that massive move down. And what happens when moves to the downside fail? Well, it gives the market more likelihood to reverse. And so if we go into a smaller time frame of looking at that, on a 5-minute chart now, this is, again, we're still looking at the NASDAQ futures, is the market bounced here, went in kind of a methodical move up, and then boom, showed a big amount of weakness to the downside, which can show an attempt to keep pushing lower. But if you use that with the understanding that the market starts to then bounce and continue to go sideways and show actually it making a higher low right here and really a head and shoulders pattern, well, that is starting to show a reversal, because what this pattern can do is it can make people think that it's going to go down, because again, using this pattern is a lot of the time it does show strong momentum to the downside. But in this case, it's overextended and it's moved too far and it's going right into a big support zone. And so if we then go further into a 1-minute chart, you can see that again, same thing. It's that methodical move up, big move down. And then when we see it start to bounce here, we can look for an entry into the trade. And so again, remember that pattern we just saw right here. I then use that as well to confirm that it was likely to move up. And if we zoom in on a 1-minute chart, remember this is the pattern we were looking at on a 5-minute, and this is what it looks like if you dive deeper into the candlesticks. And so this is where that double bottom basically happened. And as it essentially broke here, that was my confirmation for getting in. And so with this trade, I basically coupled two different patterns. I coupled it with this in terms of it showing a failure to go lower. And then I combined it with this pattern on a 1-minute chart of when it made that extreme low and then started to make a higher low here, confirming that head and shoulders pattern we had. And from there, it domino effects to where this smaller pattern right here shows a reversal to this. And then going up to a 5-minute, this pattern right here gives a potential for it to move even higher. And then if we go up to a 15-minute chart where we just look at the big picture, well, if the market reverses this larger trend down, well, we have a likelihood to continue to reverse and make a larger trend higher. And a perfect target for this is if you look at this move down here, a lot of the time when the market makes a clean move like this to the downside, if it's going to reverse that, that's a really good target. And you can see once the market kind of had this consolidation and then broke out of that, it made a very clean, fast move to this high. And then it started to just chop around from there because that's where there was a gap between the support and resistance levels. And so this is why I use larger levels as my support and resistance zones, because it allows you to use that domino effect. And then you go down to a smaller time frame chart, enter in on the trade based on more of a micro pattern, which gives you a more accurate entry right at the lows. And then once it gets going, I usually manage it based on what I'm seeing. And I then managed it on a 5-minute chart because the market was moving pretty clean and I was able to capture about $2,900 on that trade. Now let's go back to the trade I entered in this morning and let me walk you through the 5-step checklist that I use to jump into these trades. This candlestick walkthrough and detail about how I read them is really only one portion of how I enter into these trades and then how I then manage them. And with this trade this morning, I actually did something I've never done on a trade before, and it allowed me to basically not get knocked out at break even and capture this whole swing. And so it was really lucky that I did that. And so let me take you back to this morning before this happened and why and how I got into this trade. Now we've already talked about the candlestick pattern and the whole 3-line strike pattern of what we're looking for. But when I first opened my charts this morning, this is what the market looked like. We're looking at the NASDAQ futures and the market had big moves like this. And so where are the key areas of support and resistance? That is my first thing I always want to look for because I'm looking for reversal trades. You want to be trading off of the key levels. And so here, well, the market's bounced off of the highs and lows here multiple times. And so that's why I drew a support zone and a resistance zone. And then I always do that on a 15-minute chart. The whole idea is, again, thinking about that domino effect. I want to see the big picture levels because that's where it's more likely we're going to have a larger move lower off of those levels. And so looking at this morning, if we go to a 5-minute chart, I like to go into these smaller time frames again because using the domino effect, I want to get a more accurate entry. And so the market opens up at 6:30 my time. I'm on the West Coast. And so the market opened right up here. And so the first couple minutes, if we actually go into a minute chart, just because it'll show you a little bit more action, is the first couple minutes of the market are usually pretty crazy. And so I always stay out of the market for the first 10 to 15 minutes, just because the market always has noise when it first starts out. And so it could go like this and like this. And so I don't want to jump in a trade and get knocked out in this garbage right here. And so what I was looking for this morning and what I actually posted in the chat room as well, I wanted to see the market either make a double top here or some kind of breakout of the previous high, because I wanted to see it make an attempt to break this high and then fail, because I always, again, kind of going with that reversal 3-line strike pattern, is I want to see the market make an attempt to go the opposite direction and fail, because I always find that as the strongest way to jump in and capture a reversal in the other direction. And another thing, the second actually thing in my checklist is always making sure that the current uptrend is broken. And so you can see on a 1-minute chart here, I've gone off the lows and the market kind of bounced here. I wanted to make sure that the uptrend is broken. You know, maybe you could draw here, that one's broken. And so any uptrend line that I try and draw is broken. And the key there is that once that's broken, just like with this 3-line strike pattern, is, you know, it generally has an uptrend. And then once that uptrend is broken, well, it opens the door for the market to make a clean reversal. And so that's exactly what I'm looking for. Every time I look for a reversal, I want to see that uptrend broken. And then from there, I want to see the market make an attempt, that attempt to keep going higher. I never jump in on the break of that trend line because the market, a lot of the time, like you see here, is it moved lower and then broke and reversed higher. And so as this is printing candlesticks, I'm now thinking, okay, now I'm on a 1 minute chart. I am looking for that final confirmation. I want to see it essentially fail here and make our 3-line strike pattern form, and I will jump in on the low or the break of that candlestick. And if we actually switch over to the recording now, because that'll show you more of what I'm doing in real time, is the market moved up here. And so I'm just thinking, okay, either this is going to break out higher or it's going to reverse and show a nice bearish candlestick, and I want to jump in on that. And so all of this is about patiently waiting for that setup to happen. And so as it starts to break this, and so this red bearish candlestick right here, again, is not enough. You need a big candlestick like this. And so it's hard waiting through that candlestick because it can feel like, oh my God, I'm going to miss out. And instead, I always wait for the candlestick to close. And then from there, the market just chopped around for a little while. And so my thought was, okay, that's okay. I want to get in on a break of the low of this candlestick. And so it then breaks that. And then from there, it shoots lower. And so I put my stop loss above here, as my thought is, you know what, if the market comes down here and breaks and keeps going higher, again, we're going based off of the structure of the market. And so because of that, I want to get out and cut my losses at that point. The whole idea is, because I'm taking reversal trades, I risk a smaller amount to gain a larger amount. And so in NinjaTrader, if we go back to the actual chart, I have a risk reward tool that tells me exactly how many contracts I need to trade to hit a fixed risk amount. This is something I've actually created. And what it does is it just allows me to say, okay, if I'm gonna get in here and I'm gonna put my stop here, I wanna try and target about $600 of risk per trade. And so it'll then, essentially, if you look at this, it'll then adjust. Okay, well, now you need 2 contracts to target that 600 risk. And so it allows me to stay at a safe amount. And then down here, you can see the targets also show how much I'll make if the market gets there. And so I like to always target 3x at a minimum. I like to make sure that the swing potential, if the market does go to the other end of the range, is at least 3x. Now, of course, it can keep going, or sometimes I get less based on just managing the trade, but that is something I always use every trade because I find it so important. And so the market started going in my favor and it made a little pullback here and kept going lower. And so I'm thinking, big picture, that the market is either going to sell off here and keep going lower, or it's going to reverse and knock me out, and I'm okay getting out. And so the one thing I did here that I've actually never done before is, as I saw the market come up here, you see how my stop loss is right here above this high? I actually moved it back to break even. And the reason why I did this is because I realized that the market was kind of being choppy, but I made a conscious decision that I'm okay going back to break even because I think the market needs as much wiggle room as I can give it. And I'm okay giving it up until break even. And so you can see right here is the market. My stop was originally right here. The market would have knocked me out right there. And instead, it barely moved up there and then reversed back lower. And so it kind of chopped around here for a little while. And so I'm just still here, just sitting, waiting for this to play out, because the big thing that I'm looking at is, if we go to a larger time frame, is, the market's about here, is that there is no support anywhere in this area. And so for me, I see that as there is nothing holding this up if it breaks lower here. All it is there's just, anytime you're trading a reversal, is the market's gonna go up, lose momentum, and then it might just sit there and chop for a while before it switches that momentum lower. And so eventually, if we go back to this, now it's all of a sudden that momentum is switched. And so it just takes time to do that. And sometimes that can take minutes, hours. And so all of a sudden, I don't know what happened. Maybe some news came out, the market just cratered. And so for me, I'm thinking, well, the market's been choppy and you can see we're at that support level now. I switched to a very tight trailing stop because we're above my profit target now. And so what I did was I moved to just the previous candlestick high. And so I just, as we moved down, just previous candlestick high here, this candlestick was so big that I moved to the middle of the range. I think if I had multiple contracts, I probably would have just taken one off here or moved my stop to here and had the other one here, but I was trading only one contract because that's what my risk allowed. And so one key thing about this strategy is finding the correct support and resistance zones. And so in this video right here, I'm gonna walk you through the 5 key concepts I use to find the correct support and resistance zones. Because if you don't do that, you're likely to try and take trades in areas where the market actually isn't gonna reverse, and you're gonna lose more money than you should.